So you want to be a stock trader, who wouldn't if you're seeing this and that? But the question is, do you have the right mind frame for it? Here are some of the things that you need to know to better your expectations of the game.
First, accept that losing is part of the game. You are not gonna win every trade nor win every evaluation period. As for myself, I evaluate my performance on a monthly basis. This gives the kind of trades that I'm familiar with enough time to present and play themselves out. Coming from a performance like January, I was very much susceptible to make trades outside of my system, try new things out, and chase money instead of just following my system. This led to a negative month. It's all good as the magnitude of the loss is a manageable one. Could have been worse given the amount of experimentation I did. These losses are learning blocks and it shouldn't define you. What does is what you make out of it. Second, less is more. Sify, or SIFY, a TipTicks trade idea back in February 9, could have been my February difference maker. But when it started to prove itself right, that's when I turned to be reckless. Had I focused my energy on Sify alone that day, I would have had a better run with it, avoided unnecessary losses, and would have ended February in green. As they say, quality over quantity. Third, listen to the market. For March, TipTicks had very limited trade ideas. It was the market's way of indicating that the logic sets infused in a platform does not fit the market environment. If your strategy doesn't fit the market environment, it's okay not to do anything, as the market is telling you that it's not time for that. Save the emotional allocation for when it's ready. Don't force it. It will come back in. Fourth, take a break. After a number of unnecessary and experimental trades, I decided to slow things down and just follow the logic. Taking a breather allowed me to neutralize the bad habits that were starting to surface, make sense with what's happening with the market in an objective manner, and to create new logic sets and improve existing ones. Honestly, looking at the bigger picture, I could stop now and just enjoy the rest of the year, but it's my drive for TipTicks to gain more acceptance, polish the algorithm, and for it to be part of people's trading journey is what's keeping me going.
So if you're in some form of losing streak, or at least confused, pull yourself out of the game for a while. Take time to reassess your processes and mind frame. The market will always be there anyway.
Number 5. Start small. Whether you're just starting out or recovering from a losing streak, it's important to build up your emotional capacity to lose, confidence, and appetite for risk for your next trade. This can be done with small trades as it builds up momentum if it's right, and if it's wrong, there will be a limited emotional damage. 6. It takes time. For good trades to present themselves, to know what works for you, to be good at this graph takes time. Approach stock trading at your own pace. Don't compare yourself to others. Comparing creates unnecessary pressure. Focus on your own progress.
Wherever I am right now, my mind frame, my state of mind, appetite for risk, perspective took time to build. When I was starting out, I honestly didn't know when I will be good at it. All I knew back then was it's gonna take time, that I want it bad for myself. Not that I'm saying that I'm good at it. Alright, more of I know myself better and I know what I'm looking for in the market now. It's a long game, not an overnight thing. This leads us to number 7. Define what you want from the game.
As for me, my goal in this game is to have a trading strategy that works, can be relied on. I'm not here to catch everything, nor aim for the moon. I'm here to participate in what makes sense to me. Go define yours. Lastly, have a system. At the end of the day, the goal in trading stocks is to make money. Having a back-tested strategy in place makes that possible. This is the exact reason why TipTicks was built. To have a systematic approach, help sift through the market for opportunities, fitting my logic sets I've witnessed work repeatedly. As I learn and understand more the market, how it moves and how it operates, there will be periods when your approach will work, and that's the time that you should be active. And at the same time, there will be periods when it won't, in which staying on the sidelines makes more sense. That's why having a trading tool like TipTicks is beneficial, as it confirms if it's time for your strategy or not. Trading is easy if it's the right environment for your style, so better save your emotional allocation for that and maximize it when it's there. Now we've been giving TipTicks a facelift, as well as polishing new and current logic sets in it. I'm very much looking forward to share this to everyone in the soonest of time.
Till then, we'll let the opportunities present itself and be ready when it does. Of course, with the help of TipTicks. If you like this video, make sure you subscribe, follow our social media link to keep in tune with the progress that we're making on the platform. Dial tipticks.com and bookmark it on your web browser or something. Thanks for watching the video. I'll see you on the next one. Hopefully with a better setup next time. Peace. Ciao. It's so white here.